Welcome everybody to another episode of Sang Lucci TV. You got me here, Lucci, with Brian Weiner today. Weiner, how you doing, man? Weens, what's going on?
Good, good.
How's the weather out there in New York, man?
Cold. It's actually 70. Dude, now the volatility's increasing and the temperatures now go from 55 to 72.
maybe
It's
we can
tough.
maybe we can do some vol plays on the
Arm
weather.
that shit. Yeah.
All right, everybody. So what we're going to talk about today is P&Ls, the different P&Ls. The kind of psychology behind the P&Ls, especially out there in the Twitter world, and then the different types of P&Ls that you're going to see. Obviously, if you're a market maker like Mr. Weens is here, your P&L is going to look substantially different than my P&L, which is crazy kind of cowboy trading, or an algo P&L. Which is making trades within fractions of seconds. So they're all going to look a little bit different. So we're going to talk about each different one and the effect out there in the public, as far as perception and things like that. So first things first, let's do a quick market recap here. Brian, you've been watching the markets. You didn't watch today, did you?
I know that we dumped.
We dumped at the close. At the close, we
Oh.
dumped about 10 handles. It was a sell program or something. We
Oh, for
dumped
real?
about 10 handles, and most of the day was pretty choppy. A
Hmm.
lot of people were looking for follow through from the weakness that we saw yesterday. Down over 100 points. I think the S&P was down like 16 points. We got a lot of weak. There's a lot of weakness all over the place. Apple is kind of one of the only names that's really holding up there. Facebook somehow made all-time highs in this crappy tape here today. Twitter is still a little bit strong as well. So I don't know. There's a lot of people vying for both sides. I personally think there's a lot left on the downside in a lot of these high flyers. So if you notice, like Netflix, names like Netflix, Tesla, Priceline, the Google, all these kind of names. They really have more room here to drop. So we'll see what happens in the coming days. Banks are acting pretty weird. You have Bank of America able to hold 17 during all this crappy tape, but again, I mean, the more we start selling, the less she's going to be able to do it. So we'll see. We'll see what happens going forward. Let's see. Yeah, why don't we get right into this, man? Let's just talk
Let's
P&Ls.
go, man. Yeah,
Let's
let's do
talk
it.
P&Ls. Let me show a couple different examples here. P&Ls. First, let's show mine, and let's take a look at this thing, and we'll talk about it a little bit. So let's see. What do we got? September 12th. This is a P&L statement from September 12th, right? And when you're looking at P&Ls, when number one, like, let's go very basic with this. I mean, a lot of people tend to complain that they don't know what the hell is going on in these things. They don't know what is happening. Are you long this option? Are you short this option? What is happening? All right, so let's just really quickly just go through the basics here, just so you know what you're looking at. All right, so if anybody's trading an option, if you're trading a stock, you're just going to see your stock ticker there. If you're trading an option, generally you're going to see your stock ticker above it. You're going to see your option contract. So whatever the expiration is, whatever your strike price, and if it's a call or a put. Opening average price, you're going to get different columns. There's a lot of different columns, a lot of different ways that you can sort of segregate information depending on your trading platform. You can show bid ask in these things. You can show all kinds of stuff. This is the last price on the option. This is quantity, how much I'm currently holding right now. Total P&L, this is what I'm up on the thing right now or down on the thing from the day's open. Okay, from the days open. Trades, this is the number of actual orders that I sent out. And then volume, this is the number of contracts that I actually traded for the day. And then total value being total value of the position. So, for example, here we got 100,000. That means I have 2,700 of these contracts at a cost of, or at a price of, 36 cents or whatever it is. And that's going to be your total value. Okay, so quick thing about this P&L. I mean, how does this differ, Brian, from let's say your P&L, right? You being a market maker, what are some of the other things that we're going to see on a P&L from let's say somebody like yourself versus me with a lot of this long option kind of exposure?
Right. So you're gonna obviously have stock as part of stock P&Ls because the stock is hedging you know most of your positions.
Right.
I mean, really, the stock is like the net difference between your long and short delta options. Um, a market maker is not going to look at total value. They don't care about that. A
Right.
market maker is not going to look at. I mean, they might look at trades because they want to see what the average edge is per trade or also per share, so volume.
Right.
You're going to have total P&L. You're going to have your quantities, but you're going to have quantities uh, on a different platform. You're not going to look at this summary. You're going to be looking at kind of like an expanded option chain. You're going to see every single strike and then call and put on each side with, um, and basically what I'm getting at is that the volume the volume is going to be going into that. Your P&L is going to go into a small box like this, but it's not going to be broken down per option per se. It might
Right.
be broken down per name most likely. It depends upon the actual market maker and who was in charge when they told the GUI guy 10 years ago to construct this.
Right, right. So my
So
question to you is, when when you have, and I'm assuming it's per name simply because like you guys are in so many different
it's
strikes, right?
definitely per name, and it's broken down per month, and it might be broken down
Right.
put out of the money, put wing out of at the money, and out of the money call wing, or in delta buckets. It depends on how fine tuned you want to be,
Okay.
because when you're trading as a market maker, you might trade a random strike 3 months away for size because there's edge because one dude wants to do one thing, and you got to see that you have risk on this one strike on this put wing, so you're going to have to so you visualize it, so you'll see, oh, where's my risk coming from? It's that. But the black box automatically is going to be adjusting their markets based on that one big position. I'm
Okay.
going
So
far ahead of what we're talking about.
yeah, yeah. So my question to you is that when you actually look at, let's say, your breakdown P&L per name, does it motivate or influence you? I mean, does it influence you in any way? Because for me, let's say I have 8 different positions, or sometimes I'll even have 1 or 2 different positions.
Hmm.
When I look at that P&L,
Hmm.
I'm motivated to do X, Y, and Z as a result. So let's say I see that P&L coming down,
Yep.
I'm motivated to either, boom, just go ahead and take some off,
Yep.
or possibly hedge that situation, or
Right.
whatever the case is. What is it in your world?
Right.
Since you have all these different strikes going on,
Yep.
how does P&L affect your trading? How does looking at it affect your trading?
Well, you can see kind of how the P&L is growing, if it's rapidly decreasing or increasing. If it's increasing, you're like, great, let's size up. Let's turn the size multiplier on. We'll trade more. If we are losing a bunch of money, you're going to see where it's from, and you're going to identify where the biggest contract positions are. Now, I
Right.
say contract because Vega really is the function, but or is the variable. But when you're dealing with a lot of front month stuff, there's not much Vega. So basically, what you got to look at is look at your Greeks. You got to see where the Greek risk is at.
Right.
And once you look at that, you see you might have a lot of theta in the front month, and maybe you're making a bunch of money on that front month position because we're moving. Well, might want to start getting out of some of that stuff. So either
Right.
way, big fluxes in P&Ls, you're going to be analyzing why you're making money and why you're not on the spot. And the way to do it is by looking at the Greeks that you have and per name and per month.
Okay. Okay, and then just to talk real quick about when you were at trading machines and you're looking at actual algo P&L and that kind of thing. Are you looking at that at all as far as decision making as a result of looking at P&L, or is it just about machine needs to be on, machine needs to be off kind of thing?
Well, again, so you're making money and you're having above average day. I mean, you're basically looking at what your position is. You might With me, I had a good indicator of say volatility, and I would see that I'm making a lot of money or I'm losing a lot of money. Then I would reference the tools that I had, such as a volatility plot, and I would see that volatility's been going up or been going down. If it's been going down, do I want to just cut it off, or do I want to cost average and try to size up and cost average my volatility? If we're going up and I'm long vol, I'm going to be trying to do things to
Right.
lock that in by selling stuff.
Right, right, right. So we have a couple questions here that we want to make sure we hit before we kill it here. This was kind of put through from Greg here. He's saying negatives associated with actively watching your P&L while in a short-term trade. I mean, I know me, for example, like I am, a pretty emotional guy when it comes to trading. So I'll have the tendency to look at my P&L and subsequently feel this sort of rush of emotion to be like, maybe I got to do something. Maybe I got to do something.
Hmm.
Where it doesn't seem like you're kind of in that camp. You kind of you
No.
just know that kind of fluctuation is going to happen, and you just kind of stay focused.
Yeah, that's a good point. It's just like when you're talking about the HFT, it's kind of like a blown up version of that. It's like a longer, it's a less HFT. It's more medium term
Right.
trading.
Right.
And so you're going to have fluctuations, but the fluctuations are going to be bigger and they're going to be slower as opposed to HFT has really small fluctuations and they happen many times in a second.
Right. Right.
So,
And then another question is, what are some tips that we can give to some of the newbies out there about managing their P&L
right.
when things get hairy? So let's say things get a little bad, your bias was wrong, or whatever the case is, and all of a sudden you're kind of freaking out. What kind of advice can we give to these people
Right.
about managing P&L when things get a little hairy?
So it's a question of what is your target? Are you just reading the tape and the tape's telling you it's still a short, so yeah, you're gonna have fluctuations, so there's really no need for you to get out. Now, are you having a price target and you see other things that say maybe, because such and such didn't happen, then this price target might be changed.
Right.
Well, you might, but say you want to stay in, and I talk about this in my course, you might want to spread your risk a little bit if you can sell an option or hedge it.
Right.
You want to hedge it,
Right.
and you don't have to keep scalping yourself in that one leg you want to stay in. You hedge it, and that hedge makes money. And then once you see something change again back to the original direction, you get out of your hedge, and your
Get
hedge
out of
might have
that
made you
hedge.
and your hedge might have made you money. And that other position might be a loser. Your original position might be a loser or not as good of a winner, but keep in mind that hedge P&L is locked in. It's only locked in if you get out of it.
It's
You
yeah,
know,
absolutely, absolutely.
and people need
And
to remember that.
Yeah, and I think going back to now me like starting to basically hedge for myself and do it for my book or my portfolio, I'm starting to really understand when is it better to sell a call or buy a put to hedge? When is it better to just get the hell out of the trade? Like when is it better to do all these things? And my advice to a lot of the newbies out there who maybe haven't really delved into any kind of hedging strategies before. It takes a while, man. It takes a while to figure out the nuances. It really does. It's not just a quick fix that, and I'll bring up a couple examples from when Bryan and I try to do this. When we were still back in New York, some of the issues that we were having was that all of a sudden I'd see my P&L kind of drop. I knew something needed to happen, and oftentimes we'd have too much size, or there'd be no liquidity, for example, in that particular option. The read was a little bit wrong. There's so many little things that you have to account for that off the bat, like we just kind of couldn't figure it out together.
It took till that Google time, and it really is. It's if you know something's up, you have to react. And if that hedge is wrong,
Yeah.
you can't get mad about it. You have
Yeah.
to know that over the long run, the hedge is going to work.
Right.
And once you sense you need a hedge, you just do it. Like in that morning when we were both hungover,
Yeah.
we just fuck it. I just did it because I just grabbed Google by the balls and I
Yeah.
just sold every call I could. And you just know. But again, it does evolve over time. That was just
Right.
me taking animalistic instincts and just fucking being like, blah, sold.
Absolutely, absolutely. So how has your view of the P&L changed throughout your career? So, for example, like in the beginning, as well as most of you retail guys out there, most of you guys are watching your P&L like every single second, and any little fluctuation is causing you to make decisions, and oftentimes those decisions are guided by that raw emotion. And I would say a large percentage of those times is not the right decision. It's not the right decision. You're not making the right decision based on, let's say, the right emotion here. So if you're kind of influenced too much by your P&L, that can really hurt you. That can really hurt you over time. And it takes a little bit of getting used to. Some people, it's even advantageous to just block your P&L completely so you can't even see it, so you just focus on the trade and making decisions based off the trade versus how much you're up and down. So that was something that took me a while kind of to figure out. Brian, did you go through any changes in your career as far as looking at your P&L, or was it always the same for you?
Well, there's two different careers. There's one working for someone, and with that, it was just assuming there's going to be more and more edge. And Ezra actually has that same approach, and he doesn't really look at his P&L. He just looks at the contract count, because over
Right.
time, it's going to add up to positive P&L if you have the right strategy. As a market maker, you have the right strategy. When I was a retail customer, it was more I was looking at my P&L. When I was the past couple of years with Apple in its heyday, I kind of didn't look at. I just glanced at the P&L, but I just knew I just needed to get hit on trades, and I was acting like a market maker, trading Apple. So it's a matter of if it's retail money, I can understand you looking at your P&L,
Right.
but if you're a retail customer, you're already saying to yourself, I am going to risk some capital. Why am I trading? I'm trading because I know how to trade. Why do you know how to trade? You know how to read the tape, or you know
Right.
how to trade options or whatever. So you need to stick to your gut. You got to stick to your model. Your model being, I know how to read tape, and the tape's telling me we're still going down.
Right.
Don't look at your P&L. But the caveat to that is, if you're trading the weeklies,
Yep.
and we do have a temporary bounce, say your long puts or short calls, well, we might have a bounce. The volatility is going to come off, and you're going to get some theta during the day.
Right.
So you might want to adjust your trading style. You might want to get out of a winner or hedge that winner by, if you're long puts, maybe you want to sell a put, or you might want to buy a call. The problem is you're sucking on decay.
Right.
So
Right.
that's how you figure out. You're going to learn how to figure out seasonality in your position. You're going to learn about how to properly hedge that delta exposure. You need to understand what delta is in order to know that you have delta exposure, but you do. So,
Right. Right.
and you'll learn that over time.
Absolutely. So, guys, I mean, everything that Brian just kind of threw out there, a lot of this stuff that you can really start adding, just little bits and pieces to your trading that can help you, especially in the long run, your career longevity and all that kind of stuff. And this is all things that Brian is going to teach you in the new class here, the new class which you can find on sanglucci.com. The what do we call it? The options training course? Yes,
Options
that's what we're calling
training, and it comes with this sick workbook that I can't stop patting myself on the back about, but I just love adding to it. And you can, I actually put the Black-Scholes model in there, even though options are priced differently nowadays, but
it. Yeah.
essentially it's the same, it's close enough, and you can enter in parameters and come up with an option price, and it'll tell you how much theta you have.
Right.
How much you're going to lose over the course of a day, and it might be 60 cents. So maybe get out of this if you think we're going to chop around for a good
Right.
period of time.
Right. So for anybody looking for that kind of added of value as far as pricing your option and saying,
And
okay, if
spreads.
I'm going exactly, so if I'm going to experience, 60 cents worth of decay here, maybe I can make a better decision. These are all tools that Brian is going to hook you up with in his new course. So check out sanglucci.com for the Lucci method or the options training course. Obviously, we do have the market structure stuff from Haim as well. Have you taken that course, by the way, Haim's course?
No, I kind of learned through osmosis the past
True.
since 2008. What, 6 years almost? Man, I've been with him over 6 years now. This is crazy. Yeah,
Crazy.
I've learned a lot. I should take yours too. I need to
Yeah.
learn how to friggin' tape read properly.
Indeed, indeed. We all gotta do each other's course. So we'll get around to it. All right, Brian. So thank you very much for joining us. And guys, you can check the recording on YouTube. Go to sanglucci.com for all the new courses. We got a new chat room up there as well. So the functionality is a lot different. So a lot of things going on in the world here of Sang Lucci. Check it all out on the website. Brian, thanks, man. I will see you soon, man.
Yes,
Pat's on
sir.
Sunday. Pat's on Monday night, actually.
Monday night, man. It's
Monday
gonna
night,
be. We
actually.
gotta turn that up. I tell you. We can't do this anymore.
Indeed, indeed. All right, take care, man.
Later, yo.